Thank you, Madam Chairwoman. It's good to be here, and I appreciate the committee inviting us to testify today. This is quite a crucial issue. I'd like to ask that my written statement be submitted to the record because I'm going to try to narrow my oral remarks a little bit. You have a lot of expertise up here on some of the more technical questions of how the information gets processed and how the money gets transferred. So I'd like to kind of focus my remarks on some of the more practical objections that small businesses have, but also the question of whether this, even in a perfect world, would really be a solution to the tax gap as the IRS perceives it. The bulk of the tax gap, as the IRS has reported, it comes from the underreporting of income. And so this clearly is an attempt by them to figure out a way to get more of that income reported. There are a few problems, I think, with that analysis, and one of them is that there's not a lot of evidence to suggest that most of the underreporting of income comes from credit card transactions. There's some evidence to suggest that there's underreporting of cash transactions and some other things like that, not so much on the credit card side of things. So you begin at least have to question, well, why does this seem to be so important? And we think that one of the reasons it's important is for actually there are a couple of reasons we think it's important for them. One is because they think it will enable the agency to do some modeling. And that is to say, if your credit card transactions are outside the norm for your industry, it'll send up a flag that maybe there's something funny going on in your business and we should come look at what you're doing. That's enormously concerning to us because, again, for a couple of reasons. One, because there is great diversity in the small business community, and just because an average of 60% of transactions in a given industry are on credit cards, and another business seems to have 80 or 90% of the transactions on credit cards, doesn't necessarily mean anything's going on that's unusual. It has a lot to do with the demographics of the customer base of that business, perhaps, a lot to do with the way that person has chosen to run their business. Doesn't necessarily mean anything funny is going on. But those kinds of businesses, we think, are going to become subject to greatly increased audits and administrative burdens that come with those audits for no real good reason. Secondly, the IRS tells us that they want to find non-audit based ways of collecting revenue. That doesn't seem to fall in that category. And then there's a whole raft of concerns that we have about what small businesses would have to do to sort of reconcile their books with the reporting that they get, and we've already heard from a few of them, but the list goes on. There's lots of sharing of credit card processing services among small businesses. It could be the flea market, it could be the doctor's office you've already heard about, but there's a lot more that goes on in the economy as well, and that's going to have to get sorted out, and it may ultimately mean a lot less use of credit cards in the small business community, which provides a whole other layer of burden for those small companies. But there's also the question of reconciling, cash versus accrual systems. I mean, a business may send out an invoice in December for a printing job, for instance, to a customer, and it goes on their books as a receivable that year. Well, they may not get paid on a credit card the next year, and it'll get reported as income the next year. They've got to figure out a way to reconcile those kinds of things. Lots of businesses take deposits. Well, that's not income until you actually take delivery. That deposit could be refundable. You don't count that as income, as taxable income, until you actually purchase it. Yet a lot of deposits, whether it's for a new kitchen or a boat or whatever, are paid on credit cards. And so there's just a huge stream of money that flows to businesses on credit card transactions that simply isn't taxable income. And that's going to have to be sorted out not just by the IRS, but by the business owners themselves. Again, even if all of these technical questions can be addressed, and we don't think they can be, but even if they could be, and the credit card processors could find an easy, seamless, lawsuit-free way of providing good data, there are still huge obstacles for how this data would actually get used by the IRS in any meaningful way to actually increase the revenue in a way that makes sense for small companies. So we appreciate your having this hearing, and we would strongly urge you to do everything you can to convince your friends at the Ways and Means Committee and over in the Senate and the Finance Committee that this is a particularly bad idea.
Friends.